Well, hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Of course, the cues coming out of global markets aren't looking all that encouraging. Wall Street saw a weak close yesterday, led by a sell-off in tech shares. Asian markets also largely mixed, and the GIFT Nifty hinting at a muted, start for the Indian market. So no big triggers coming in for the headline indices, but lots of stocks will be in focus today. There'll be a couple of block deals. Of course, there's been an RBI action on JM Financial just a couple of days after it came down, or it wrapped IIFL Finance. So NBFC stocks will be in focus. Of course, we saw that Bajaj Finance was among the top Nifty losers yesterday. A lot of these mid and large cap NBFC names will be in focus today. Of course, we will also be taking up all your stock related queries during the course of the show. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street retreats further from highs amid tech-led sell-off. Nasdaq leads the fall, led by Apple, as reports say the company's iPhone sales slumped 24% in the first 6 weeks of 2024. Investors also await Fed chair's testimony to the House later today, and Asia, meanwhile, opens mixed as inflation in South Korea accelerates. The GIFT Nifty, as I mentioned, is hinting at a muted to negative start for the Indian market. Oil prices are steady around the $82 a barrel mark following China's pledge to boost economic growth and OPEC Plus's decision to extend output cuts. Gold, meanwhile, shines bright at record highs amid mounting rate cut bets, and Bitcoin slumps 8% after scaling a new record past that $69,000 mark. And RBI imposes strict restrictions on JM Financial products, bars the company from financing against shares and debentures, including IPOs. The central bank finds serious deficiencies in the firm's loan process and also highlights concerns on serious governance issues. Also, watch out for Zomato and Samvardhana Motherson because there's likely to be a block deal in both the counters. Well, with that, let's take a look at some of the cues for trade today. Of course, the Nifty spot yesterday shut shop at 22,356, down 50 points or thereabouts, although it did manage to recover from day's lows during the course of the day, right? The India VIX also cooled off quite a bit. It's firmly below that 15 level, down 4% almost yesterday. And if you look at some of the cues coming in from the F&O space, the Nifty open interest was down 4%, shed somewhere around 5.1 lakh shares. The Nifty March futures trading at premium of 76.95 points vis-a-vis 92.35 points. And if you look at the Nifty Bank open interest, that was up 9.2%, added 2.1 lakh shares. Of course, Nifty Bank also index, I think, clocked in a 5-day winning streak yesterday. It staged a very smart recovery during the course of the day and ended the day higher yesterday. If you look at the PCR, the put call ratio, that has dropped to 1.23 vis-a-vis 1.3, and the stock that continues to be in F&O ban is Z Entertainment. That has been in the F&O ban for a few sessions now, and today as well it will be in the F&O ban. Fund flows, well, FIIs bought shares to the tune of 574 crores in the cash market yesterday. DIIs too, supported the market. There was buying. Around 1,834 crore worth of stocks were bought in the cash market by domestic institutions. But let's see whether or not we have the technical analyst Rajesh Palviya. He is through. So welcoming Rajesh on the show. Rajesh Palviya of Axis Securities joining in this morning. Great to have you on the show, Rajesh. 22,200 to 22,400. This seems to be the band that we have seen so far this week, right? But just about 2 sessions to go this week. Do you expect any sort of breakout towards 22,500, or do you think we will be range bound for the rest of the week and end somewhere around that 22,300 to 400 mark?
So 22,500 seems to act as a immediate major stiff resistance at this moment, because if we analyze the last 2 days move of market, most of the call writers are still taking their bets on 22,500 strike. So that is likely to act as a major hurdle for at least for this weekly expiry. But if we analyze the overall structure, we are very optimistic that yes, possibly sooner or later we are going to break this range also. As overall texture for market is on the bullish side, a lot of sectors which were underperforming are now started participating. So broad-based buying action is taking place. So we believe that buy on dip should be your strategy. Looking at the near-term structure, 22,300 is having immediate major put concentration and followed by 22,200. So I think market will try to find some support buying action in the range of 22,250 to 22,300. So we advise here to one should look to buy in decline. If you get opportunity to buy Nifty around 22,300, so one can deploy their long trade for buying on the in the decline. So at this moment, we are initiating here, call option. One can look to buy 22,300 call option, which was closed at around 119. So if you get opportunity to buy around 100 rupees for this call option, one can buy this call option with stop loss of 75 and upside. We are projecting again target towards 140 to 150 for this call option. Even on Bank Nifty, there is outperformance, and Bank Nifty is showing good traction in terms of buying, and most of the banking stocks are showing good buying interest. Bank Nifty is now comfortably holding above 47,500. So if we continues to hold and sustain above 47,500, then follow-up buying action is likely to be there in today's session also for Bank Nifty, and possible upside we can see towards 47,800 to 48,000 for Bank Nifty. As we have seen that most of the private bank as well as the PSU bank started contributing to this up move. And already we have seen short covering in most of the large cap bank as well as in PSU bank. So I think Bank Nifty is looking more promising for trading point of view, though we have today weekly expiry. But looking at the data setup, we expect that if we hold 47,500, then one up move is likely to be there in today's session. Keep your stop loss at 47,300 to hold your long position in Bank Nifty also.
What's happening with Bajaj Finance, Rajesh? Among the top Nifty losers yesterday, it has broken below that 6,500 mark as well, and the stock has been in a downtrend, in a consistent downtrend, right? Do you expect 6,000 levels also to be breached on the lower side? Or do you see more pain on the charts?
Definitely, Nandita. This is the third consecutive month where we are seeing lower high low formation. That clearly shows there is a sustained supply pressure is taking place in the stock. In this process of correction, the stock now slipped below to its 200-day moving average also. That clearly adding up weakness in the stock structure on the short to medium term as well as on the long term also. Stock is looking weak at this moment, series of lower top, lower bottom formation. So that clearly shows that, yes, we may see further more pressure is likely to be there in coming weeks. Possible if it remains below to 64.50 kind of level for some more trading session, then yes, we may see further more follow-up selling in the stock, and then yes, it may slip to further lower level towards 6,150 to even 6,000 kind of level also. So yes, there is a possibility that we can see further more pressure to be there in Bajaj Finance. I think one should avoid at this moment. Those who wants to go short, they can go short in any minor pullback with stop loss of 64.50. On the downside, 6,200, 6,150 are the immediate level where we can see Bajaj Finance to slip further.
All right, more weakness on the charts for Bajaj Finance. But hold that thought, Rajesh. We'll come back and talk about other stocks, your recommendations and viewer queries as well. But let me also bring on board, Santosh Nair joining in this morning to talk about what's really happening in the NBFC space. Of course, great to have you on the show, Santo. First, it was IIFL Finance. RBI, of course, put a ban on issue of fresh gold loans, right? And now it is JM Financial, right? They've been prohibited from financing against shares and debentures and even IPOs. Do you think there could be more such action on the anvil when it comes to the NBFC space, especially given the fact that we also had a SEBI advisory coming out just last week where they had cautioned against the froth building up in the mid and small cap universe? Do you think NBFC is where all the froth is and that is why the regulators are acting?
Well, clearly if you see the actions over the last few days, it's very evident that the regulators want to prevent this froth building up, and there are clearly signs of that, at least in the stock market now. as for the specific question about NBFCs, we still need to see if it is a NBFC specific issue that is being flagged here by the RBI. With IIFL Finance, it had to do with the gold loans. With the GM, it had to do with loans against shares. And in the case, in both cases, the RBI said that there were some governance issues as well. We're not clear as to what exactly those are. The case of GM Financial, again, they said that the credit underwriting standards were not robust enough. So it's early days, but it's very evident that regulators are worried about this huge gush of liquidity in the system. Already we are seeing some kind of selling pressure in small and mid cap shares over the last few days. That's also because I think the market is now getting worried that probably there could be more such action coming. I think that's something that's clearly weighing on the minds of players.
Right, I was reading all the brokerage notes, of course, for IIFL Finance also. I think we've had a Jefferies downgrade. Although valuations for some of the companies like GM Financial may look appealing, but do you think it could have a serious impact on financials with respect to ROEs and of course valuations going forward? What is your sense?
Well, we saw good run up in NBFCs over the last year or so, and one of the assumptions clearly is that the growth will continue for some time. Now, what could happen is that because of these regulatory actions, at least in the short term, we could see these NBFCs cutting back on loans, and which in turn could have some implications for their profitability. So I think near term there could be some concerns, and while valuations may appear reasonable, in case market is then worried that the growth may not be as high as it was earlier, then I think there could be a bit of a sentiment dampener there.
All right, I think we are just about a minute or less than a minute away from market open. Thanks a lot, Santu, for joining in and sharing your thoughts on the NBFC space. Appreciate your, stepping in the last minute. But let's take a look at how the markets are really opening up. Pull up the Nifty. Yeah, of course, some bit of pressure as was being indicated by the GIFT Nifty. Down by about 30 odd points. So not a very weak open. However, it is subdued because the global market cues were also looking fairly subdued. If you look at the Wall Street, Asian markets, all of them giving out negative signals. Nifty Bank Index has also come under pressure today. It was a fifth day of gains yesterday, so it has snapped out of a 5-day gaining streak. If you look at the advanced decline ratio, I think it is in favor of declines. In fact, it is evenly spread out. So 1:1. That is the kind of ratio we can see when it comes to the advanced decline or the breadth of the market. Let's pull up some of the sectors then. Auto. I want to see what the auto pack is doing yesterday. Tata Motors was among the top Nifty gainers, and that was lending support to the auto pack. But today, some bit of a cool off coming in there. Metals, extend losses. Let's also pull up the IT pack. Yesterday, that was among the top sectoral laggards on the back of CLSA downgrade. Today as well, 0.5% down for that sector. Aside of that, realty is another pocket that I want to see on the screen and how it's really panning out. So most of the sectors, that's also down 0.5% or thereabouts. So most of the sectors, in the red today, including the pharma pack. Aside of that, let's take a look at some of the gainers and losers in the session today. Bajaj Auto, of course, the buyback opens today, and it is the top Nifty gainer. SBI Life yesterday was in a spot of bother, but today has staged a good comeback among the top Nifty gainers. Kotak Bank, Grasim, Ultratech Cement, UPL, is extending gains from yesterday. Remember, this stock has been stuck in a downtrend over the last few months, but last two sessions we've seen good traction coming in on a UPL as well. L&T, Reliance Industries, Tata Motors extending gains from yesterday. Divi's Lab, Hindalco as well among the top Nifty gainers. On the losing end, let's see how things are stacking up. Apollo Hospital, hospital stocks have been under pressure for a few sessions now on the back of that SC order on standard health rates on both in both public and private hospitals. So some of these private hospital names have been coming under pressure. Today is no different. Apollo Hospital is the top Nifty loser, and so is TCS. Yesterday, there was a downgrade from CLSA, and TCS was among the top Nifty losers. Even today, it is the top Nifty loser as we speak. Infosys, HCL Tech, all of them under pressure. Even FMCG names like Hindustan, Unilever, Britannia under pressure. But let's pull up the charts of an a JM Financial and see what is the kind of reaction that has trickled in of the RBI action. Stock down 16%. Of course, that was expected. There will be a forensic, in fact, there will be an audit of the books, and of course, the JM Financial has said that they will be assisting, or they will be cooperating with the RBI, and they will make their case in front of the central bank as well. Also, IIFL Finance, yesterday it was down 20%. Today also Jefferies has downgraded the stock. Let's see how that stock is faring. Of course, another 20% downtick coming in there. So NBFCs, clearly under a spot of bother as the RBI takes action against some of these companies. But let's go back to Rajesh. Rajesh, we've had a weak open, but I think we are holding up above that. We have just about slipped below that 22,300 mark. So looking at the open, what would be a stop loss or what would be a level on the downside that you'll be watching out for?
So I think we are just hovering near to support area of 22,300. It's just 5 point we have slipped in this opening, and again in the Bank Nifty also almost we are trading almost near to 47,500. So I think another 5 minute is very important for both the indices, as we are trying to hold out these two critical level for intraday trading perspective. So I think one should wait for another 5 minutes. If we able to defend these levels and sustain above 22,300, then possible pullback action we can see in the market. So some of the pocket where we are focusing at this moment, that is first is metal space, and from that space Vedanta is looking very attractive, very strong buying action in previous session and long built up was there. So we believe that one can look to buy after this opening Vedanta for upside target of 297 to 305. Keep your stop loss at around 284. And then another stock that we like at this moment is Reliance Industry. Oil and gas sector is showing very good strength, and Reliance is one of the clear outperforming stock from that space. And the kind of strength which we are witnessing since last couple of trading session in Reliance, that clearly shows that Reliance can scale up to the level of 3,060, 3,080 in the continuation of this up move. So one can look to buy this stock with stop loss of 29.80. And the third stock is from cash segment, that is Hutco. Hutco is looking very promising, and stock is now sustaining about 200 kind of level. So I think one can look to buy this stock also for trading as well as for positional perspective. We are projecting target towards 220 to 230. Keep a stop loss of 195.
All right, those were the recommendations from Rajesh. But Rajesh, charts of IIFL Finance and JM Financials. IIFL Finance was down 20% yesterday. Even today, similar move. Do you see any major breakdown on the charts here? And for JM Financial, what would be the level on the downside you'll be watching out for?
So I think IIFL Finance has broken its major support area on the monthly chart. So that clearly shows that there is a big dent on a longer term structure also. Though stock was in up move, but the kind of news flow and the supply zone which we are seeing at this moment. So now if stocks continues to trade below 410, 415 mark, then possible follow-up selling pressure we can see. And then possibly stock may slip further towards 350 to 340 kind of level also. So at this moment, I think one should avoid at this moment, negativity is there in the stock due to news flow. 415 is the key level to watch for on the higher side. Until the stock not crosses those level, I think one should avoid at this moment. Even in the today's fall in JM Financial has also turned its structure on the weaker side. Now stock is approaching or trading near to its October 2023 swing low. So now if stock slip below to 80 kind of zone, then we may see further more follow-up selling in the stock. So below 80, another round of supply pressure we can see towards 70 or 65 kind of level also. So I think for JM Financial also one should avoid at this moment, let the dust to settle first, and then one should review again.
All right, that's the view on IIFL Finance and JM Financial. What about Motherson, Samvardhana Motherson? How would you approach this stock now? There were reports that promoters will be, Motherson Wiring would be paring stake by 4.5% in the stock. So here on Motherson, how is it looking on the charts for you? Yesterday we saw good uptick backed by strong volumes.
So in previous session, yes, stock was showing very good strength, and stock, if we analyze on the short to medium term perspective, stock is making series of higher top, higher bottom formation. So trend is on the bullish side only. Yes, some downtick is there because of some stake sale. I think overall structure is bullish. I think one should look to buy this stock as a near-term, short-term structure is also bullish. So 119 is the stop loss to buy this stock. And on the high side, once stock again, crosses above 125, then possible target we can see towards 135 to 140 also. So 118, 119 should be keep as a stop loss to buy this stock in this downtick which we are seeing after the opening.
All right, that's the view then on a Motherson. But let's try and take some viewer queries that are trickling in this morning. For Coal India, particularly, Satvika Ranganathan wants to know your thoughts on this stock. We did see some bit of pressure coming in when the entire news flow on how e-auction premium would fall in the coming quarter, would be lower in the coming quarter. That news came out, but I think it did see some bit of recovery since then. Coal India, do you think it's a buy at the current levels?
Yeah, it's in our buy list, and stock structure is showing bullishness after a brief corrective move. Again, stock is recovering, and looking at the overall structure, we believe that again the stock has showing the strength that it may surpass again its previous swing high, and we may see again Coal India to move in new trajectory. So we are projecting target towards 475 to 480 for Coal India. So I think one should look to buy this stock at the current market price. Also, even in decline, if you get opportunity around 464, 58 kind of level is a good opportunity to buy with stop loss of 452.
All right, that's the view on a Coal India. Hope that answers your query. It is on Rajesh's buy list. But Rajesh, there's another query coming in on Z Entertainment. The stock has been in F&O ban for quite a few sessions now, and Rakesh wants to know, he already holds 620, shares at an average price of 220. He wants to know whether he should average at current levels, and when can he look at levels of 220 again on the charts? Do you think that is a remote possibility of the stock hitting 220 again in the near term?
No, it looks too very tough at this moment. Multiple times we have seen, whenever stock moves to 190, 200 kind of zone, some negative news flow comes on the surface, and then stock take a hit. So this has happened multiple times in last, couple of months. Looking at the overall structure, stock is in bearish zone for across all time frame. Until the stock not able to sustain above 180 level on a week on week closing basis, there won't be any short covering action in the stock, and most of the time stock remains under F&O ban period. So that also put some pressure on the stock as the participant not able to participate in F&O segment also. So those who already stuck, they're not able to trade in the stock in F&O also. So most of the trader at this moment are stuck in their long position. I think 180 is the major supply zone, 220 as his buying price. I think it will take time until the all news flows are not settle down, or some positive news flows not comes in the stock. So till the time, I think there is a challenge to recover in the near term basis. But again, on the downside, 150, 145 is the critical support area. If stock at all breaks those levels, then we may see further more downside towards 130 also. So I think in pullback, he should try to exit from the stock, because it's very difficult to trade this stock. In last couple of months, we have seen most of the traders, investors have burned their investment in this stock. So I think one should avoid this stock, because a lot of news flows are impacting to the stock prices.
Right. I want to take up the next query on LIC. This one is coming in from Pawn Rajesh. LIC has been holding out above that 1,000 rupee mark quite smartly, right? Of course, if you look at the monthly charts, although the gains haven't been all that great, just under a % or thereabouts on a 1 month basis, but as I mentioned, it has been holding out above that 1,000 rupee mark. Here on, would you suggest buying more, or taking some bit of profit here, or do you think just hold on and wait for higher highs to book profits?
So if he can hold it for long-term perspective, I think he should hold the position for long-term. But if he has taken the position for trading perspective, the stop loss should be placed at around 980 level. Till stock is holding above 980, I think trend is likely to be there on the bullish side only. And on the high side, once stock crosses about 1050 level on a weekly closing basis, then possible really we can see towards 1100 to 1140 kind of zone also. But we are holding a bullish view on the stock, and we believe that on a longer term perspective, stock may deliver good amount of return if you wish to hold this stock for longer term perspective. Uh, we expect this stock can really further towards 1200 to 1250 kind of zone also in coming months. So yes, buy on dip should be restricted for investment perspective, but for trading 980 should be your stop loss.
All right, keep a stop loss at 980. Hope that answers your query. But before we take up more queries, I want to get your thoughts on a Havells. This stock has been doing extremely well. Last 1 month, we've seen a 16% kind of an uptick, and even today, it's been fairly buoyant. It has, in fact, it is making a foray in the kitchen appliances segment as well, right? Here on, do you see levels of 1650, 1700 anytime soon? 1588 is the 52-week high. It's very close to that level now.
Yeah, very strong accumulation and then breakout of this accumulation zone that clearly give us confidence. Yes, Havells is the stock where we can see a rally to continue. As stock has already given a breakout on the near term range, and looking at the buying action in last week, that clearly shows that new buying action, new investors are taking positions in this stock. Now, one should keep stop loss of 1520 to hold their long position till stock is holding above 1520 level. Then there is a high possibility that stock may scale up to the new all-time high trajectory also, and then follow-up buying action can take this stock further higher to 1650, even 1700 kind of zone also. So after long consolidation, stock is breaking out of its range. So we believe that yes, one should hold the position on the long side. 1520 should be your stop loss.
Right, of course, those are the levels to watch out for on, Havells. But Zomato, reports of Antfin selling stake. Of course, stock has been doing fairly well, Rajesh. Right now, it's down somewhere around 2 to 3% or thereabouts. But Aditya Mohan has written in on Zomato. How should one approach this stock? Do you think the dip that we are seeing yesterday is a good opportunity to buy?
So I think Zomato is in up move only. Yes, some downtick is taking place, but still we believe that till stock is holding above 155 level, then possible again upward trajectory is likely to resume in the stock. Uh, though there was some pressure because of this deal, I think 155 should be your stop loss if you are willing to buy and hold this stock for longer term perspective. Once stock again crosses above 178 180 kind of zone, then possible really can extend, and we can see 200 plus kind of level also in Zomato, because series of higher top higher bottom formation that clearly shows that there is a sustained buying action is taking place in Zomato. So I think one can hold with stop loss of 155.
Well, that's the call on Zomato. But Power Grid, this is another stock that has shown a lot of traction, right? Last 6 months, the stock has rallied over 50%. I think Varun has written in and he wants to know your thoughts on this stock. Do you think 300 levels, is a good level to get into the stock, or do you think, we need to wait for some bit of a cool off before getting in?
I think very minor dip stock is giving recent, really. Again, if you want to buy this stock, if you get any opportunity to buy this stock around 285 280 kind of zone, that's the good level to again re-enter in the stock. As overall structure is on the bullish side only, series of higher top higher bottom formation is taking place. Even if I look at the monthly setup, almost this is the 6th 7th consecutive month where we are seeing that stock is delivering positive return month on month basis. So that clearly shows that long term trajectory is intact and on the bullish side only. So whatever minor dip you are getting in this stock should be used as a buying opportunity. Keep your stop loss at around 280 kind of zone, and once again stock crosses about 300, then possible really can extend towards 330 340 kind of zone also. So very strong setup on Power Grid. So buy on dip should be your strategy.
Right, buy on dip should be the strategy on power grid, but I want to get in your thoughts on an MGL. There's a report from Citi that they've downgraded the stock to sell from buy, and they've cut the target price to 1405 from 1480. Now, you know, there was some recent commentary from the oil ministry where they've said that end consumers have failed to fully benefit from the government's gas reforms, but city gas distribution companies have continued to enjoy high profits. I want to just pull up the charts of an MGL and see how it's doing right now. You know, of course, this is a pretty downbeat view coming on this particular stock. Stock is down 9.5%, somewhere around 1419. What would be the key support level here to watch out for?
So in recent move, stock managed to give breakout on the monthly chart. Yes, some downtick is taking place in the stock. Stock is showing some pressure. So looking at the near-term, short-term structure, stock is now slipped below to 20-day moving average, approaching to its 50-day moving average that is placed at around 1395. So that level needs to watch on the near-term perspective. 1395, if it's able to hold those level, then possible again, you know, we can see pullback action as on the longer term time frame. Stock already given a breakout, and that level is already very well intact in the stock prices. So 1395 needs to watch in the decline. If it's hold, it's again, you know, buying opportunity in this decline with stop loss of 1385.
That's the view on MGL, of course, reeling under pressure today on the back of the downgrade that has come in from Citi. But just about a couple of more queries to go. Prashant Sampath wants to know your thoughts on AngelOne. The stock has been seeing good traction on a 6-month basis, but over the last 1 month, of course, it has come under a fair bit of pressure. You know, that's also owing to some bit of news flow around it. But here on AngelOne, how is that looking now on the charts? Quite a bit away from that 52-week high level.
We are seeing that, you know, sustained supply pressure, and since last you know, couple of months, stock is in corrective mood. Though long-term structure is still bullish, but on the near-term, short-term perspective, stock is in weak zone. Stock slipped below to 20-day, 50-day moving average. That is clearly showing that, you know, some you know, supply pressure is likely to be there in stock prices. So on the higher side, 3000 is the major important supply zone. Until the stock not crosses those level, stock is likely to face you know, supply pressure for any kind of minor pullback action. So until the stock not able to regain above 3000 level on weekly closing basis, one should wait and watch. At this moment in decline, 2750 is the major support area for this corrective move. So I think one should avoid at this moment, because still a corrective move is taking place in the stock, and we may see furthermore, you know, decline toward 2750. We would advise to buy only above 3000 level. Once stock crosses those level, then one can look to buy the stock.
All right, that's the view on AngelOne. You know, defense stocks have continued to show traction, right? So we have a query coming in on a Bharat Dynamics from Nana Prakasam. And he has some bit of holding here, 261 shares at a price of 1919. And he wants to know for the short term whether he can expect levels of 2000 or not on the stock. What would you say?
So if we wish to hold it for longer term perspective, yes, possibly, yes, 2000 level can be there in BDL. Very strong tailwind for most of the defense stocks, and I think that sector is clearly in bullish trajectory, and BDL is also looking promising across all time frame. Though some consolidation is taking place since last couple of weeks, but still, if you analyze the overall structure, stock is holding its you know, important support area of 1750. Till this stock is holding above 1750 level, trend is likely to remain on the bullish side, and possibly once stock crosses above 1880 kind of zone, then yes, possible really can extend towards 2000, even beyond 2000 level also. So hold BDL. I think if we can hold it for a little longer period, yes, possible 2000 level can be crossed.
All right, hope that answers your query. Hold for the long term. That's the view here. Last query for the day, really. This one is coming in from Kubandiran Kolanji. You know, do you track Cosmo First? He has a query on that, and he wants to know whether he should hold or exit. If you track this stock, what would you advise him to do?
No, I don't track it actively, but if I analyze on the technical structure, stock is in weak zone, series of lower top, lower bottom formation is taking place. Stock is trading below to all its important moving averages across all time frames. So that clearly shows that weakness is there in the stock prices. Looking at the technical structure, 550, 560 is the key supply zone for near-term trend. Until the stock not crosses above those level, stock is likely to remain under a weak zone only. On the breakdown below 500, possible down move can continue towards 460 level also.
All right, that's the view on Cosmo First. But with that, we've come to the end of the query segment and of course the show as well. So Rajesh, I appreciate your taking out time and joining in this morning and sharing your thoughts about so many stocks, and of course also taking up all our viewer queries and addressing them as well. Wish you a very happy trading day.
Thank you.
Well, with that, we've come to the end of this edition of Opening Bell. Of course, on the IPO street, Gopal Snacks opens up for subscription today. So, log on to www.moneycontrol.com to see what analysts have to say, whether or not it's a subscribe or not. You can find a lot of articles there and, decide whether to apply for this one or not. But with that, if you look at the markets, they are weak. 22,300. The market is defending that level for now. We'll have to see how things really pan out here on. But completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.